We've seen a clear shift from major central banks recently in a very hawkish direction, and we do expect this to continue going forward. The Fed has already started raising rates more quickly by 50 basis points, and they've sent a clear signal to markets that they will continue to do that going forward, and we think that's likely until at least the September meeting. They've also pushed back on some speculation that they could pause rate hikes as soon as September. So for the Fed, they're sending a message to markets that they really want to get inflation under control. Elsewhere, we've also seen other major central banks play catch-up with the Fed. We've seen the Bank of Canada at the latest policy meeting delivered another 50 basis point hike and warned that they may need to be even more aggressive going forward. We saw a 50 basis point hike as well from the RBA in Australia. And we also expect the ECB to announce details of their plans to remove emergency policy settings going forward. We now expect the ECB to bring an end to QE in July, and then to quickly bring an end to negative rate policy in Europe as well by September. So to us, this is a significant shift from the ECB compared to where they were even just a couple of months ago. This has had a clear impact on FX markets. The biggest loser in the FX markets has been the yen this year, and we think a large part of that weakness in the yen is down to the fact that the BOJ is lagging behind other major central banks, and they're expected to continue to do so going forward. The BOJ has sent a message which is very different to other central banks in that they are still saying that they want to keep loose policy in place to try and keep inflation pressures to the upside going forward. Whereas if we look at the dollar, that's been one of the better performing currencies this year, helped by the very hawkish Fed policy. But we have noticed in recent weeks that the dollar's upward momentum has started to slow. And to us, this could be an indication that other central banks are now starting to play catch up with the Fed, and that's starting to eat away at the argument in favour of an even stronger dollar. So far, we haven't really seen any major impact on pound performance from Boris Johnson's narrow win in the confidence vote this week. That's not a major surprise, but we would expect going forward that this period of political uncertainty is likely to linger, and that could be a dampener on pound performance. On the other hand, you also have to take into consideration the potential for any changes in government policy. I think it's clear now that Boris Johnson needs to try and win back support amongst Tory MPs and also more support amongst the broader public. And one way he can do that is to try and give more fiscal giveaways. So we're already seeing reports suggesting that he could bring forward plans for income tax cuts and potentially cuts for businesses as well. And I think that would be welcome relief for the UK economy, which is obviously slowing right now because of the cost of living crisis. That then would obviously have implications for Bank of England policy. The Bank of England already needs to factor into account the recent measures announced from Chancellor Sunak, who gave away handouts to households to help cover their high fuel bills. So when you have that additional fiscal stimulus, it means that we're likely to see growth is unlikely to slow as much, and we're likely to see more inflation in the economy for longer. And the one way that the Bank of England is likely to respond to that is by tightening policy more going forward. So to us, next week, we could see a hawkish message from the Bank of England. They could put the possibility of larger 50 basis point rate hikes back onto the table more seriously. And we think that could deliver a short-term boost for the pound. But we would still stress, though, on the other hand, that we are still in a very negative macro backdrop for the UK economy. We're still looking at a combination of very weak growth and also very elevated inflation. So we're just not convinced that even if the pound does stage a relief rally next week, we just don't think that will be sustained.